go. Whoa. And live. Waiting for that one to pop up. There we go. 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 What do we have here? Live. Okay. Dividend. Stock. Talk. Done. There you go. Go live. So we are live. Live, and live. All right, we're live everywhere. Yay! All right, let's get this out of the way. Come on. Come on, come on. Hey, Miss Sherry, how you doing? I see you there. Mike Horn, how you doing? Cinnamon Roll, Yo-Yi. Yo-Yi. What kind of a name is Yo-Yi? Now, I'm not insulting the name at all. I'm just thinking, where does that come from? Ashley. John Didier, how you doing again? Back again, I see. Lovely, lovely. All right, I want to put this there. I want to get rid of... Am I doing that right? Mirror TV. We got that. You out of the way. Bring you up to there. And let's get the mood music rolling.
Dreaming stars and dive into
There we go. Yeah, getting the ball rolling. Rolling. What do we have here? The chat. All right. So live, and live. Let's get the ball rolling. Hypothetically, that's recording. Now we're recording. Alright, so we're going to stop this. And go back to the beginning. Get rid of that. We don't need that. We don't need this. All right. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, and consistent 1% per week. Yes, 1% a week, every week, consistently, over and over and over and over again. That being said, let's get the ball rolling. First and foremost, let's get some of the disclaimers out of the way. I'm not a legal anything. I'm a legal pain in the butt. That's about it. That's what all my friends and family say. Besides the point, Kiko, how you doing? Nice to see you. You should always, Alexa, off. You should always double check with legal people in your area for questions that you think may be pertinent to get to someone that has that little PhD, MD, ESQ, whatever at the back end of their name. Well, that ain't me. The only thing at the end of my name is SR, and that stands for James Senior. Okay? So, I'm not a professional trader. Well, I am a professional trader, but I'm not a, financial advisor. I'm not a tax planner. I'm not a legal advisor. I'm a nothing and nobody, just person who fell into something and said, you know what? This looks pretty darn cool. Let's check it out. I'm missing a cable here. Is it this one? There it is, right there. No, that ain't it. Uh-oh, I'm about to lose something. All right, let's do this. Just use you way over here before that phone dies. And we're charging. All right. So, do your own due diligence. Ask yourself the question. Seek out legal counsel where it is necessary. That being said, you guys are going to give me suggestions. I'm going to run them through the mill and see how they stand up to what I'm trying to do. But it would be great if you guys could understand where I'm coming from. I'm 62 years old, which means I no longer work. I am retired. So I don't punch a time clock. So I don't think the same way you guys do. Okay? When I make a trade, it has to be successful. That's it. I have no desire to go back into the workforce. Even though I'm perfectly capable to do so, I just prefer not to. I put in 5 decades. 5 decades. That's 10, 20, 30, 40, 50 years of working for other people. So now I'm just kind of relaxed, chill back, and I share what I've learned. Okay, I think it's a major sin if you take what's up here to the grave with you. You should pass it along. So I'm creating video logs, video diaries for my children, my grandchildren, my great-grandchildren. So when I'm no longer here, they will have something to go back on and saying, who created this mess? That's the dude right there, Papa G. Woohoo! That's me. Anyway, that being said, let's say hi, see who's in the house. Be a little cordial. We got KJ over here. KJ, who do you got with you? Let's find this out. Who do we got? We got KJ and me. Okay, KJ and me. All right, so far. Down here, we have eggs and bacon. My name is Leah. Leah, we're investing for weekly cash flow. We're looking for a simple, safe, predictable, consistent 1% per week. Yes, Leah, I know 1% a week. Hold on. 1% every week is over 50% by the end of the year. It takes less than 5 to 10 minutes a day. I see you. Hold on a second. Less than 5 to 10 minutes a day. Just like combing your hair, brushing your teeth, taking the dog or the cat for a walk, same thing. All right? I have to go for now. Keep on doing, Kate. You got it. Have a nice day, Leah. So who do we have over here? We have Concept. Okay. Concept, how you doing? Over here, who do we have? Over here? Wow, we got a lot of people over here. We got Sherry, Miss Sherry, Rich, Mike, Yo-Yi, Cinnamon Roll, Ashley, John Didier, 7 Clovered 700. Okay. User 1515, whatever. Tony, Exodus, Yusef, Chris, the King David, Insurance Coach, Cool Dunes. Shell, Ara, Kiko, I see you, Magoo, okay. M Dust, okay, just kidding, rolling my ass off, okay, that's funny. GB, Christian, Sufyan, Alazar, cool name. Raj, hairstylist, all right, Raj. Jay joined, Patrick, John David, Arthur, Ty, Derek, Brian, Tom. All right, Mr. Comer, Stewie, Michael, Rob, Borick, Build Bright. Rich, how are you doing today? I'm doing awesome, thank you. Kika, good evening. Shibu, okay. G10s, Bach, Eddie, Richard, Simon, Christopher, Mugar, Tim Supranis, okay. David B. Justin, okay. The Shop Panda, Daryl, Curly. Wow. Coach John, the Shop Panda. All right. Hola, ¿qué pasa? I cannot read that at all. 392.50, call 17 July, yay or nay. Definitely have no. Now, don't get me wrong. I understand exactly what it is, a 392 call option expiring the 17th of July, yes or no. I understand that completely. But do you realize there's 11,497 different companies in the stock market? What that one goes to, I really have no idea. Just Ruben, Joe, Dylan, hey, what's happening, Dylan? Mike, hola, ¿qué pasa, amigo? Oh, MSTU. Nick, MSTU, a good time to collect shares to do this strategy. Okay, Nick, let's take a look at MSTU, and I'll give you my opinion. You may or may not like it, but then again, Nick, I have no idea how old you are. I have no idea what your risk factors are. I have no idea how much time you have to go to your retirement. I have no idea of anything other than you want to take a look at MSTU. So I'm going to give you my take on MSTU from my point of view, someone who is retired and looking for safety, predictability, and protection of my assets, which means I don't want to take any risks. The least amount of risk possible, I'm all for that. That's what I'm looking for. Then the other. Jaden, then the other. I have no idea, then the other. Your eye. What about, okay, yeah, my eye got stuck with a nail, so I only can see out of one eye. So that one is usually doing its own thing, so to speak. But thank you for bringing up sour memories, Jaden. I appreciate that. All right, first one on the list is going to be MSTU. MSTU. T-Rex too long MSTR daily. So this is going up against MSTR. Okay. So it's a 2X. Okay. Well, I'm going to say no right off the top. Now, the reason, Nick, the reason I'm saying no, it's got nothing to do with the stock itself. It's got nothing to do with MSTR, that company either. What it has to do with specifically, Nick, is this right here. The call options. Now, I write call options against the positions that I carry. So if I'm going to buy a stock, I'm going to want some cash flow from it, which means not only am I looking at the dividends, I'm looking at the premiums from the weekly options that I write against the stock. Well, this one right here, 0, 0, 0, 0, 0, if and when the stock goes down. Okay, when the stock goes down. You see it right here? It went from 110, now we're down here at $1.78. From 110 to $1.78. Now, that could be an optimum time to buy if you're okay with this. Okay, here's your last 30 days. 30-day high, the 30-day bottom. Where was it 30 days ago? Where is it now? Look at the flow. Up, down, up, down, up, down. Well, we're at 178 at the moment. But that doesn't have anything to do with 0, 0, 0, 0. Yeah, no thank you. No money, no thank you. Sorry. That's it. Just sorry. Next. Felicio. Oh, where was I? All right. Kiko, thank you. Are you a day trader? No, I am not a day trader. Just pick a stock symbol. Absolutely, Brian. There are 11,497. Just pick one. Which one do you want, Brian, and why do you want it? Blackwoods, how you doing? Brian, I saw that call, and I was wondering the same. Yeah, I understand what it is, but I don't understand what it goes to. Now, we can do the process of elimination. What stocks are in the $300 area that have a weekly option on the 17th? Wait a minute, it could be a monthly option because this week is the third Friday and monthly options expire this week also. Okay, so I have no idea what it goes to. Old School Mick, what's going on? Brian wants to take a look at BMO. BMO. No, for two reasons. Now, Brian, the reason I'm saying no, okay, number one, I don't buy anything at the high of the year. Absolutely nothing. Buy low, sell high. That's the mantra we've all been taught for decades. I've never, ever, ever, ever heard anybody say, hey, BMO's at the high of the year. Let's buy it. Why are you buying at the high of the year? And then look at these numbers. Yeah, those don't look good either. But reason number two, I don't want to do BMO. July, August, September, November, December, January. Those are months of the year. I got five very simple rules. And rule number 4 is weekly options only. I don't do monthlies. The numbers just never, ever work in my favor. Do we think it's undervalued? I have no idea which one you're talking about. Hi, can you view HPQ or Lululemon? HPQ, yes. Lululemon, I don't think it's been around long enough. But Hewlett-Packard, check it out. Here we go. Go to this side. The top and the bottom. Where was it? Where is it? Look at up, down, up, down. Now she's going back up again. Here's your top. Shoots down as the bottom. Now she go up 24.77. The 25s are looking at 41. That's over 1.5%. Well, hell yeah. Let's take a deeper dive into it. So, a deeper dive. What's the last 90 days? The last 3 months. Last 3 months. The top, the bottom. Where was it? Where is it? Up, down, up. That's easy to see. Look. Up, down, up. Okay, here's the top. She bottoms out. Now she's going back up again. How far up? Who knows? Is it something you want to put your money on? Well, let's find out the last 30 days. Here's your last 30 days. The top, the bottom, where was it? Where is it? Down, up. Easy. The highs right there. We got all that room there. There's still enough room to make a profit on this one. So the 25s, yeah, let's do the 25s for Hewlett Packard. Number one of the day. Yay, number one. All right, let's get rid of this. Get rid of that. Covered calls. Now, the reason I use covered calls is they're simple, they're easy, and they're profitable and predictable. Simple, safe, predictable. That's what I like. All right, one covered call. HPQ, Hewlett Packard. 17 July 26. That means this option is going to expire in 4 days. Okay. The $25 call option. Well, I'm selling somebody the rights to buy it from me anytime between tomorrow morning and Friday afternoon, and they're going to pay me $65 for each contract. Now, that doesn't mean anything until you have something to compare it to and fill in the blanks. You can't come up with an answer with a sum of the equation missing. All right, well, let's check it out. We're going to need a calculator. Okay, the calculator, first thing we want to do is put the profit, 65, into the calculator. To get the rate of return, we have to take a look at all the common factors. The profit, the investment, what's the rate of return? Okay, so for the profit, 65, and the cost of the trade, see, max profit, 65. Do you remember the part where I said simple, safe, predictable? Simple, safe, predictable, consistent, no way to lose. Simple, safe, predictable, consistent, no way to lose. So the predictable part, simple, safe, predictable, I know what the trade is. I know what my break even is. I know what my max profit is. I know what my max loss is. I know what my investment is, cost of the trade, including commissions and fees. I know what my buying effect is if it was on margin, which I suggest don't do it until you understand it. So when I say predictable, before I even do the trade, everything is right there. Everything I need to know. The amount of shares being traded, the bid, the ask, the high, the low, everything I need to know. That being said, I want to take profit divided by my investment. That's going to give me my rate of return. Now, the rate of return I'm about to blur it out to you is for 1 week, 4 days. Because this option that I'm buying, I'm selling is going to expire on Friday. So we don't know what's going to happen until Friday gets here. But I have 5 simple rules. Rule number 1, never buy anything you don't understand. Okay, that's number 1. Number 2, never sell at a loss. Number 3, make sure the company's profitable. Number 4, weekly options only. Number 5, make sure all the numbers work. So as the evening progresses, we're going to touch on each one of those aspects. Later on, I'm going to open up the phone lines, and if you want to have a conversation, just give me a call and we'll chat right here, right now. Give me about 5-10 minutes. We'll open up the phone lines for one lucky guest. All right, so the profit 65, the investment's 2,400. What's my rate of return? 2,435. First one of the evening is 2.6. Now, think about it. When I introduced myself, I said I'm looking for 1%. I'm looking for 1%. Well, I just so happened to trip over Hewlett Packard and it's offering me 2.6. Well, now I have to ask myself the questions. Number 1, does it make sense? Well, for me it does, because I've been doing it long enough. Number 2, do I like this company? And that's a question that's going to take you long and hard to think it all the way through from beginning to end. Do I know who Hewlett Packard is? Do I know what they do? Do I know what they stand for? Do I know what their profits look like? Do I know what their dividends look like? Do I know what their book value is? Do I know what the income is? Do you understand the company, and do you think it's a good place for your money? Now, I can't answer it for you. Only you can. Only you can decide whether or not you like Hewlett-Packard, and if you like Hewlett-Packard at this current price. Okay, it's offering 2.6% for 1 week. Well, I'm going to write it down because I like 2% for 1 week. Ooh, no. Let's try that one more time. All right, one more time. There we go. Now, you're at it. There we go. And that's doing that. While that's doing that, let me clear this up. Get rid of that. Get rid of that. Back to this. Back to there. And that's ready to go. All right, so here. This is what we found yesterday. All right, so that's yesterday. This is today. I don't want that one. I want this one. Right there. I want to go right there. All right. And here we have it. Hewlett-Packard, big and bold. One covered call, HPQ, Hewlett-Packard. 17 July 26, meaning that this option is going to expire this coming Friday, 4 days away. The $25 call option. Here's my profit, 65. Here's my investment, 2,400 for a 2.6% for 1 week. Not 1 week, for 4 days. Monday's already gone. So we got one. Yep, it was Hewlett-Packard. Who came up with that one? Yes, Laurie. Wait a minute. What tick was that? Hewlett-Packard, HPQ. You know what, Laurie? Let's take a look at HPE. That way we'll get both our bases covered. HPQ and HPE. They're both Hewlett-Packard, and they are very similar. So let's take a look at that one next. $2.6 HPQ. All right, we're going to do HPE next. HPE. We're going to do that one next. Yeah, I'm so confident. I already wrote it up there because I think it's going to be the same. All right, so let's change to HPE. HPE, here we go, same thing. Hewlett-Packard, different part of the company because they separated off, but let's take a look. There's the top, here's the bottom, here it was, here it is. Sideways, up, down, up, what's going on there? It doesn't look that good. Okay, here's your top, here's your bottom, she shot up, now it's coming back down again. Not a good one. So HPE, not for this week. Sorry, kiddo. What do we have next? Old school Mick, hopefully that worked out for you. Lululemon, you say. L-U-L-U. Interesting. Take a look right there. Anytime I look at a chart, I'm looking for the same 5 things over and over and over again. And it takes me 2 to 3 seconds to see all 5. Let's see if you can do it too. You ready? The top, the bottom. Where was it a year ago? Where is it now? And what is the money flow? Do it quicker. Top, bottom, is money flow. 120. The 120 is going for 266. That's over 2%. So let's take a look at Lulu. All right, last 90 days or the last 3 months. There you go. Same thing. The top, the bottom, where was it? Where is it? Down, up, down, up, down, up. That's definitely going up. I love the double negatives. You ready? You cannot not see it. Do you like the double negative? I get Miss Fader's probably rolling around. It's like, no, James, you don't use double negatives. You cannot not see it. Right there. The top, the bottom. Now she's coming up. You cannot not see it. Last 30 days. What do you think? The top, the bottom. Now she's going up. So let's do this one. Lulu. Not saying that I would do it because Lululemon hasn't been around long enough, in my humble opinion. But you wanted to take a look. Let's take a look. The 121s right there. Here we go. Lululemon at 121. 17 July. That's this coming Friday. One covered call. The 121 call option. The profit's 301. The investment's right around 12,000. Let's take a look at what the calculator has to say. 301's the profit. The investment's going to be $11,799. That gives me a total of 2.5% for Lululemon. If you like Lululemon. I don't know. Well, let's save this one. There we go. 2.5. All right, let's get rid of this. Let's get rid of that. Get rid of that. Back to that. There we go. Next. All right. So that didn't work. All right, I was wrong. I admit it. There you go. Lulu. Lulu for you. One call. Whoops. One covered call. Lululemon. 17 July 26. That means it's expiring in 4 days. So whoever buys it, you got 4 days to make up your mind. The 121 call option. 301's the profit. 11,799 is the investment for a 2.5% for 1 week. Now think of this for a second. A little bit of third grade math, if you don't mind. Third grade math. How many months in the year? 12. How many weeks in the year? 52. If I get 1% every single week, that's a 52% simple interest. 64% compound interest, but 52 simple interest. Big difference between compounded and simple. I use simple interest because I use most of my money to pay my monthly bills, is what it is. We'll take a look at SoFi in a minute. Chill out for a second. So, 2.5, you say. $2.5 for Lulu. Next, what do we get next? Old school. Yeah, we did that one. Okay, Blue wants to take a look at Bank of America. BAC. No. Now, don't get me wrong. I like Bank of America. They've been in business for over 100 years. They own the absolute most amount of life insurance than any other company that I know of. There's an actual website called Bolicoli, Bolicoli. Okay, that is business-owned life insurance or corporate-owned life insurance. So if you understand about the corporate-owned life insurance policies, Bank of America has the absolute most. And if you understand what that means, you're one step above those who don't understand it. But think about it. Why would a bank own life insurance? Think about it. Martez, muchas gracias. Thank you for that. It's a serious question. Think of it. Write it down. Why would a bank open up life insurance? It's an interesting question. Sorry, I had to block someone. I don't like it when they do that kind of stuff. All right. What are we looking at? All right. Hold on. All right, right there. Bank of America is going to be a no. PEQ, P-E-Q, A-S-T. What the heck is A-S-T? A-S-T is no options, no thank you. Who came up with that one? Sorry, P-E-Q. Keep calm, Reagan. Okay. Brian, you're welcome. Dr. A. Tony Elf, huh? A-L-F. Interesting. It's going to be a no, though, only because she seemed to run out of steam. Now, a couple of weeks ago, Doc, this would have been good. Look, here's your top. Here's your bottom. She shoots up, she drops, jumps up again. You missed it by a couple of weeks. The bottom was last month. Let me zoom in and show it to you. Okay? Here's your bottom a month ago. She shot up nicely. Now she's coming back. Not quite sure where she's going. Last 30 days would look like that. Okay? She shoots up, down, down. See? Today, she's actually coming back down again. So, not today. You just missed it. You missed it. Look, a couple of weeks. Nice little run up. All right. Crash Bandy Coach. Crash Bandy Coach. Thoughts on 2 over the next year. All right. TTWO. Interesting. I'm not quite sure what it is you want me to say here, Crash Bandy. But here's your top. Here's your bottom. Here's where it was. Here's where it is. Down, up, down, up, down. So it's actually coming down at the moment. Let's zoom on in. Here's your last 30 days. Your 30-day bottom, 30-day top. Now she's coming down. What's going on here? Is Friday the bottom? Is she turning around again? I don't know. We don't have enough data to make a good educated guess. So if you really like it, I like 2 days up, and on the third day I jump in. So you got your bottom right here, Friday. Now today is higher than Friday's bottom. Doesn't really mean anything because you need some more space for it to move to figure out whether or not it's a good thing. EKs, that's Smuckers. SJM. SJM. It is Smuckers. No. Sorry, EK, I don't do monthlies. Okay, July, August, September, October, January. Those are months of the year. They trade once a month. I'm looking for weekly cash flow. Once a month doesn't work for me. Oscar, what the hell are you thinking, brother? Why do I want to buy something at $900 a share? Seriously, $900 a share. Why would I want to buy it? Okay, take a look at your last 30 days, Oscar. The top, the bottom, where was it? Where is it? Shoots up, back down, back down. No, it just, Oscar, it just doesn't look good. Look, okay, 30 days ago, we're at 975. We shoot up to 1250, then we drop down to 900, shoot up to 1050, and drop back down to 900 again. So it's coming down, as you can clearly see, so no thank you. Diana, how you doing? Like me and you. Can you move the camera to the left and hear those option stocks? You got to be more specific, dude. That just makes no sense. But thank you. Jessica, how you doing? Roberto, thank you, Roberto. Nastra's in the house. Woohoo! If you listen to this guy and trade like this, you deserve to lose all your money. Thank you, Pathy. Seriously, do not do what this guy says. Pathy, I'm going to agree with you 100%. I really am. Go buy low-cost index funds and stop gambling. Wonderful. You tell me one index fund that gets more than 20% a year. I'll put my money in it. I don't mind. Seriously, don't listen to this guy. If you listen to this guy, you deserve. Okay. Lovely. All right. I'm going to answer him. How come I can't answer his question? I want to answer his question. He's not allowing me to answer his question. He puts question up on my board. He doesn't allow me. All right, never mind. I'm just going to ignore him. Options, not even once. No idea what he means. This man will make you bankrupt. Ooh, I love it when a person is so, what's the right word? So detailed in his analogy. If he had a good analogy, I could probably have a conversation with him, but apparently he won't let me answer any of his questions. Dave, dear, what's going on? Banjo, good evening. Buy low-cost index fund and stop gambling. Can I answer this one? Why can't I answer him? All right, in that case, I'll just have to do this. That works. All right, Jordan, what are your thoughts on cash secured puts into covered calls? Jonathan, I love, Jordan, love that idea. Seriously. Now, Jordan, the strategy that I'm giving to you this evening was created for my 9-year-old daughter back in 2008. In 2008, she said, Daddy, can you teach me? I said, okay. So what I'm showing you was created for a 9-year-old. And I don't know why that other dude just couldn't grasp it. Mikey G, Hewlett Packard 2339, got it 48 cents for the 2350 call. Cool beans, Mikey G. Martez, Burnett, all right, Drac, thank you. Old school, thank you, much appreciated. Have to go, hope to see you again soon. Hey, I'll be here. Sweet Dan, Leo Thomas, like yours are not allowed. All right, thank you there, Sweet Dan. Shar, good evening. Spew, AGNC, Crabs Bucket, AGNC. We looked at this one this morning, AGNC, and we said no to it. And the reason we said no to it is 0, 0, 0. Now, people tell me I live in a dream world. Well, great, it's my world. I should be able to live how I want, right? Right, thank you. All right, so my thought is, as the stock is going down, what am I collecting? I'm collecting dividends because I like companies that increase their dividends. As the stock comes down, the stock price comes down, well, the dividends are still increasing. Remember back in 2008 and 2021 and 2024, well, everything dropped hugely. Well, there are companies out there that consistently increase their profits still and increase their dividends. Those are the ones I like. So when, it's never ever an if, it's always a when. When the stock drops, okay, if you're not collecting dividends, you better have some option premiums to collect. Well, if the option premiums are 0, 0, 0, no thank you. It just doesn't work that way. Sean, SCHD, you're not going to like this, Sean. Okay, every time someone asks me about SCHD, I show them this, and they get a little queasy in the belly. Check this out, Sean. Here, this is Yahoo Finance. And we're going to put in SCHD just for you. SCHD. Okay. All right. You ready, Sean? Here we go. 3256. I'll go up just a little bit so you can see it, so you don't think I'm making stuff up. Schwab U.S. Dividend Equity ETF, SCHD, right there. Schwab Equity ETF, SCHD. What are we looking at? We are looking at every single dividend this ETF has paid out. We're looking at from all the way back to 1983 to see how often is SCHD consistently profitable. Buckle up. You're not going to like it, Sean. Are you ready? Here we go. Slide all the way down to the bottom, and here's our first disappointment. You ready, Sean? First disappointment. Very first dividend was in 2011, which means it's only 15 years of only 15 years of dividends. That's it, 15 years of dividends. I didn't say they were increasing. I didn't say they were decreasing. Let's take a look at the factual numbers. I love facts. I do, because you can argue all you want. Okay? The reason I don't get into politics is because there's one side that refuses to look at facts. A fact is a fact, up, down, left, right, hot, cold, warm, all that kind of stuff. Facts are facts. So let's take a look. Are you ready? 0.04, 0.046. That's good. 6.8, 6.9, 8.6, 6.6. Hold it. Sean, did you notice that? Right here. 8.6 to 6.6. Dude, that is a 25% decrease in profits. Because a dividend is a portion of the corporation's profits they give back to us, the investors. So, if I'm making 8.6 and the very next profit I get is 6.6, That is a 25% decrease. I'm going to say it slower. 25% decrease from one dividend payment to the next dividend payment. Hold up. Let's see how much more. All right. All right. So down, up, 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 down, up, down. Not good. That brings us to 214. Down, down, up, up, down, up, down, up, 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 down, up, down. Do you see the issue here? Wait a second. It even gets worse, believe it or not. Okay. Up, up, down, 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 up, up, down, up, 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 down, up. All right, I'm going to stop there. Now what I want to do, Sean, is I'm going to go take a look at the summary right here. I want to see what kind of yield this thing has. So we know the dividends or the profits are up, down, up, down, up, down. No consistency whatsoever. I don't know why you find it appealing. Okay. Sean, why do you find it appealing? That I don't know. All right, so the yield. Do you understand what the yield is? You take all the dividends, you add them all up together, and you divide it by the purchase price of the stock. Well, the stock is at $32.56. That's currently $32.56 right there. So the yield oh, that's awesome. 330% yield. No. 3.3% yield. 3%, Sean. Inflation is higher than 3%, but you're putting your money into SCHD and it has 3.3% yield. So you're putting your money in, the end of the year, you get 3.3%, and inflation is higher than 3%, so you're going backwards. So I'm showing you, giving to you for free, how to get 1% every single week. But you still like 3.3% for the year. It's just not resonating with. I just don't get it. I'm missing something. Someone has to educate me because I've got to be wrong. You know, getting fit, it's not a stock. You know, I love it when people say that. It's not a stock. Let me tell you. Now, I'm going to agree with you. It's an electronically traded fund. And don't give me that exchange traded fund bullshit, because you go there, it's all a bunch of freaking computers. Okay? So, you have the open, the close, the range, the volume, the average volume, the yearly return, the yield, the PE ratio, the net assets, the expense ratio, and the beta. Everything a stock has. I honestly don't care what you want to call it. You want to call it a head of cabbage? Be my guest. There's someone there, the price goes up and down, and when they're profitable, they give you a share of the profits. Whether you call it a stock or whether you call it a fund, whatever you call it, whatever you want to call it, it trades like a stock. It pays a dividend like a stock. You can buy it and you can sell it just like a stock. If it looks like a stock, quacks like a stock, it waddles like a stock, it's a stock. I don't care what you want to say about it. You pay the price, it pays you a dividend, it either increases or it decreases. It does the exact same thing a stock does. Whatever you want to call it. But that's my take on SCHD. I told you weren't going to like it. Number one, they're not consistently profitable. Number two, they're only offering you 3.3% for the year. You do what you think is right for you, but 3.3% just doesn't work for me. Johnny Relly. Relly? Really? What is Relly? I have no idea what Relly is. So let's check it out. Relly. R-E-L-Y. Relmity Inc. Okay. Oh, Remity Global Inc. No. Sorry, Johnny, I don't do monthlies. July, August, October, December, and it's way too close to the high. Sorry. L Phoenix, what's going on? Okay, where did that one? Big Sasha. Where is Big Sasha? Question. I have hypothetical 500,000 bankroll. What is the most aggressive weekly ROI if I'm experienced? Well, it would really depend on what your experience is. The semiconductor index beat the SPY. I don't invest in either one of them because neither one of them is consistently profitable. Now, Big Sasha, I invest differently than most people. I have no desire whatsoever to buy and hold on to anything. Okay, now the reason I'm saying that is I'm 62 years old. Okay, so when I'm gone, I have no delusions to think that my children aren't just going to accept everything and sell everything off and take the cash. That's probably what they're going to do. Needless to say, that's what they may think they're going to do, but they're not going to be able to because I'm going to set up my account in a way which they're going to say, Papa G's a dick. Because I'm not going to just let them inherit everything. They have to prove to the, I keep forgetting this guy's name, the executor. My children are going to have to prove to the executor of the estate that they know what to do with money and they can replicate exactly what it is I am doing. Other than that, they can get shit, nothing. Okay? Yep, sorry, Captain Cab Screw. Yep, I got 4 of them. They're a blessing. I think they're wonderful. All right, so Big Sasha. I can't really give you what the most aggressive weekly ROI is because I know nothing about you other than the fact you get a 500G bankroll. No idea what you want to do, what kind of restrictions, what you do want to do, what you don't want to do. And, I know absolutely nothing. But we'll take a look at the SPY and the, what do you call it? Semiconductor index. Do you have the semiconductor index number off the top of your head? All right. Keep calm. Olivia Hubs. Olivia, what is Hubs? Hubs. It's a no is what it is, Olivia. I don't do monthlies. July, August, September, December, January. Monthlies just don't work for me. Okay, I get paid on a weekly basis, not monthly. There we go. Even though, Olivia, check it out though. Look, here's the top, 575. It dropped to 175. Now she's going up. If you like it, and that's what you want to do, good morning to you too. And I don't understand that name. I'd call you by name, but I don't understand. Please ignore negative comments. It's a waste of time. Yeah, I agree with you. It is a waste of time, but I like to at least acknowledge that they put something on me. And they went through all the time and effort to tell me I'm an idiot. I already know that. I don't need them to tell me that. Can you do Marvel? Rich, absolutely. MRVL. MRVL. Okay, it's going to be a no only because the top is here and it's dropping. But the good thing about Marvel, Rich, if you really like it, take a look. Okay, the 30-day high is here at 330. Now it's dropping. We're at 217. So how low is it going to go before it turns around and goes back up? Okay, they go up, they go down. They go up, they go down, they go up, they go down. What do you think is going to happen next? As soon as it finds the bottom, it will turn around and go back up. Luis, thank you for that, Luis. Very nice, thank you. I want to give you my account. DM me. Send me your information. We'll have a conversation. All right? Can we do RBC? Is that the Royal Bank of Canada, RBC? RBC Bearings. Okay, it's going to be a no because I don't do monthlies. Sorry. Who came up with that one? Andrew, I don't do monthly options because they just don't work in my favor. Now, they may work for some people, but they don't work in my favor. Okay? SKHY. We looked at that one last night. SKHY. That's going to be a fat no. Look at this. SKHY, no options and only one entry? No. Sorry. All right, Brian, CLX, Clorox. Now, Brian, I'm pretty sure Clorox is a monthly, and that's going to be a no. All right, let's go back up here. CLX. CLX. Yeah. Okay, I don't do monthlies. August, September, October, January, March. No, I don't do monthlies. They just don't work in my favor. Sorry, Brian. Jamies. What's happening, Jamies? All right, Michael. Following, thank you there, Michael. Mystic Dragon. Uh-oh. Mystic Dragon pulling up a sore thumb. You know why it's a sore thumb? I have Dow, and it just doesn't look good for me. Okay, here. Ooh, that looks nice. Not for me, but it looks nice for whoever's just jumping in. All right. Dow, here's the top. Here's the bottom. Here's where it was. Here's where it is. Down, sideways, up, down, up. That's clear to see. Please tell me you can see that. The top, the bottom. Where was it? Where is it? It went down. It went sideways. It shot up. It dropped down. Now it's going back up again. Well, this is where we are, right here. There's the top, there's the bottom. I got in somewhere around here, and yeah, it's a little uncomfortable for me. But if you're just jumping in, look at that. She's shooting up. So let's zoom in a little closer, because Dow looks like it might be a great pick for today. Might be. All right, here you go. You ready? Last 30 days. The top, the bottom. Now she's shooting up. 30.37. The 30.50s are going for 58. Not quite 2%, but pretty close. So let's check it out. 30.50. Why not? For Dow, if you like Dow. It's always going to come down to that question. No matter what I say, no matter what I do, it's always going to be, do I like this company? And then, do I like this company at this current price? Two separate questions. You may like the company, but not at this current price. Let it come down a little bit. See, I can tell you anything. I can show you anything. But ultimately, the choice is always going to be yours. And it's your responsibility to do your own due diligence and don't listen to some idiot online. Yeah, I'm calling myself an idiot because you don't know me. Who? No. All right, anyway, so 30.37, here we go. The 30.50s, there it is right there. Let's do one. Here we go. One at 30.50. There it is. Here we go. There it is. And one covered call of Dow, D-O-W. 17 July 26. That's this coming Friday, 4 days away. The $30.50 call option. Max profit 72. Cost of the trade, including commissions and fees, $2,900. This is only $2,900. Not like some of those other ones with 15, 18. Yeah. I remember someone wanted me to look at, what was it, MU? $900. You know, $900, that's a $90,000 position. Yeah, no. I don't do stocks that big. All right, there it is. There it is. Calculator. 72 is the profit. Oh, 72. Yeah, that hurt. 72 is the profit. And we divide it by the cost of the trade, including commissions and fees, and that is $29.78. Divide 29.78 comes to a grand total of 2.4%. 2.4 for 4 days. So there's that question in your head again. Do I like Dow at this price? Does it make sense to me at this particular moment in time? It's a yes or a no. All right, so we're going to save this one because I like 2.4%. No, I didn't do it again. Damn it. Nope, I don't want that one. Up to there. Then I'm supposed to bring it down to there. Then, whoops. Then I'm supposed to do that. Then I'm supposed to do this. Gotta go by the number. Oh, am I real? Oh, my meat popsicle. Right, there we go. All right, let's get rid of that. Let's get rid of that. Let's get rid of that. Let's go back to this. Let's go back to this. And let's pull this up right here. All right. Yeah, look at that. Tell me you cannot see that. Come on, tell me you can't see it. One covered call, Dow, D-O-W, 17 July 26. That's this coming Friday, 4 days away. The $30.50 call option. $72 is the profit. $2,900 is the investment. What did I say it was? 2.4, 2.5? 2.4. 2.4% if you like Dow. $2.4 Dow. That's 3. We got 2 more to go. There we go. What do we got next? Ooh, Casanastra wants to take a look at Mara. Mara on the wall. Ooh, no, Cos. Not this week, Cos. Now, don't get me wrong. I like Mara. I do buy it once in a while, but right there, no. And here's the high. Here's the low. Here's where it was. Here's where it is. Down, up, down, up. It's actually coming down at the moment. Maybe next week or the week after, Cos. Okay? Let me zoom into it and see if you get a better view. Okay? Here's your last 30 days. 30 days ago, shoots up to the 30-day high, drops a 30-day bottom, not quite sure what it wants to do. So I like 2 days, cause you've been here, you know I want 2 days to the upside, and on the third day, I'll jump in. Okay? George! How's it going, George? Majonker 54. Okay, interesting name, but, you know, it's what it is. I'm sure your parents named you that for a reason. Wants to take a look at Coca-Cola. Not enough room, dude. Look, she's running out of steam. Got the high here, and she's almost at the high. You got $2 left. You really want to put money up to go capture that last $2? Here's your bottom. Here's 2 days up. Okay, down, up, down. Here's a new bottom. Now she's going back up again. Can she keep going? Yeah, she can. 84.25. The 84s are going for 87, but you're losing 28 cents. You take 28 cents off of that. Now it's no longer 1%. The numbers just aren't working with Coca-Cola. And that's way too close to a new high. And why do I think it's going to get a new high? Just because I bought it. Olivia wants to take a look at Rigetti Spaghetti. RGTI. I'm sorry, it just looks like Rigetti. You know? And then it reminds me of that movie, Grumpy Old Men 2, Rigetti Spaghetti. Never mind. All right, so no, kiddo, look at that. Up, down, sideways, up, down. It's actually going down at the moment. Even if you like it, you know, I can't tell you one way or the other, but I love the negatives. I love it because I can hear Mrs. Fader in the back of my head. Remember your grade school English teacher? Mrs. Fader was mine. She kept giving me a hard time about punctuation and what do you call it, conjunctions and those other weird stuff. She said, James, you're really going to learn this stuff. I said, no, Mrs. Fader, when I get older, I'm going to hire a secretary, so I don't really need to know. She just gave me one of those. I rolled her eyes and said, ugh. All right, so anyway, here's your top. She's just dropping. But here's the good thing about Olivia. Don't get me wrong. I'm not saying no. What I'm saying, Olivia, this is an awesome opportunity for you if you like the company. Just wait. Tomorrow she might turn around. Wednesday she might turn around. Thursday she might turn around. She's going to turn around sooner or later. Nothing drops forever. But make sure you like it at that current price. We got 3. We need 2 more. Brian, Alibaba. Really, Brian? BABA. It's running out of steam right there. Let me zoom in so you can see it a little bit better. Okay, what do you think? 30 days ago, here's your bottom. Shoots up. Look at the size of that gap. Okay? She started dropping on Friday. Today, she dropped a little bit more. And Alibaba only has about a little over 2 years of profits or 2 years of dividends. That's it. So normally I don't do Alibaba. All right, so what do we have over here on YouTube? YouTube! Mr. Smith, how you doing? Mr. Smith goes to Washington. Uh-oh, Coco wants to take a look at Netflix. NFLX. Mr. Smith, I'm going to get to you in a second. Coco, that don't look good. It should take you 2 seconds, Coco. The top, the bottom, where was it? Where is it? Down, up, down. What's going on right there? Zoom in a little closer. It's still going to be a no. What do you think? 30-day high, 30-day bottom. There's your bounce. You missed it. Now it's dropping again. Looking for another new bottom. Now, don't get me wrong. I have some Netflix. It's just dropping. Mr. Smith, how you doing? Mr. Smith wants to take a look at Ford. Now, we looked at Ford yesterday. I actually bought some Ford because it looked so good. Okay. All right. Here's your top. Here's your bottom. Where it was. Where it is. Up, down, up, down, up. So she's definitely going up. I got in at 14. Now it's at 13.85. The 14 is going for 17. That's over 1%. If you like Ford. If you don't like Ford, just don't buy it. It's weird that it's so simple. There's 11,497 companies. We check every week. Every Sunday night, we check to see how many new. Holy shit! I'm gonna reboot over here. 47 is just not gonna work. So you guys don't go anywhere. I'm gonna reboot. So let's do this. Okay. Nope. Wrong way. Reboot. That one's good. We'll leave that one alone. Dismiss. All right, there. There we go. Reboot, because 47 was horrible. Horrible, I tell you, horrible. Come on. Mirror video. There we go. There and there we go. All right. All right, we already looked at Netflix. What about when? You mean Wendy's? What about Wendy's? All right. W-E-N. All right. I'm not quite sure what you're thinking about Wendy's, but take a look. Here's the top. Here's the bottom. Here's where it was. Here's where it is. Down, up, down, up, down. So she's actually coming down now with no real direction in mind. Okay, hello, hello, hello. All right, all right, all right. Okay, good and bad for you. All right. So what is she doing? Here's the top, here's the bottom, big gap up. That gap is going to fill. Oh, hell no. Because we're here, we drop down. Now she's going sideways. There's no direction to Wendy's. There's no clear direction to Wendy's. Okay? No clear direction, so no. We looked at Ford. SoFi, really, Mr. Smith? Why do we want to look at SoFi? S-O-F-I. All right. So SoFi, you missed this opportunity too. Here's your bottom. Here's your top. Here's where it was. Here's where it is. Up, down, up. Okay. But what's happening right there? Let me zoom in and show it to you. Ready, Mr. Smith? All right. Here we go. What do you think? Up, down, up, down, up, down, up, down. I don't like SoFi because it's not consistently profitable. Check out the... Wait a minute. You know what? We got time. Let's do this. S-O-F-I. SoFi. Let's take a look at the numbers and tell me what you think when we take a look at these numbers. All right. There it is right there. SoFi Technologies, 1813. Let's go over here and check out what the yield is. What are they paying on an annual basis? Okay, 45 cents a share and no dividends. Okay, so they have 45 cents per share earnings, but they don't share their profits. Think about it. There's 11,497 companies. About 5,500 actually share their profits. SoFi doesn't share profits. You're only getting earnings per share, but that's just increasing the value of the stock. Well, what happens when the stock goes down? You're not collecting anything. And you're not going to collect anything until you sell. So I just don't like stocks like that. They're not giving me consistent cash flow at all. We're going to get over here for a second. Hold on. So thank you for your input, Mr. Smith. I'm just saying no. The Elite Trader. Well, thank you. I'm going to take that as a compliment. All right, got it. What's up, Flav? All right, Rick. I'm not quite sure. I got that. Don't forget about SoFi. Yeah, we already did that one. What is your strategy? Mike Q. Wilkinson. Oh, Mike Wilkinson. Hey, Mike Wilkinson. What's my strategy? You ready? Here we go. Hold on. All right, Mike, here we go. I invest in dividend stocks, specifically those that just getting ready to increase their profit. Wait a minute. I invest in pre-qualified dividend stocks. Those are companies that have consistently increased their profits for at least 2 decades. Then I want to buy them just before the EX date because stocks like that have a tendency to increase in value just before they pay out their dividend. Also, just before they pay out the dividend, I want to jump into what's called the simplest, safest, predictablest trade there is, the covered call. I want to do it 2 weeks before the EX date because as the stock goes up, I want to get in, I want to get out, and I want to capture 1% predictably every single week. What was that? What about Verizon? Oh, let's take a look at Verizon. I like Verizon. Well, let's get out of here. Verizon, VZ, Verizon. Ooh. Now, I haven't done this in a while. Ooh, you ready? Now, the first thing I see is this. That's the first thing I see. That takes me less than 2 seconds to see that. The next thing I see, which takes me about 1 second, is this right here. Because this is a year ago. This was 6 months ago. Okay? Where's the high? Where's the low? What's it doing? We can see what it's doing, but right here is this week, last week, and the week before. That's what's the most important part to me. Now, I want to see this because I want to get an idea of where the money is flowing. So from the high of the year, we drop down here, and then we bounce back up. That's what I want to see. So let's jump into that. Okay? Clear as day. The top, the bottom, back up, back down. Now she's going back up again. 42.68. We'll look at the 43s, and they're going from 37 to 40. Ew. Not 1%. Damn it. Damn it. Oh, well, that's Verizon. Not giving me my 1%. Sorry. MCHP. Microchip technology. Now, we looked at this one the other day because it looked good. From the top here, she bounced, and then she was going back up. But she turned around, coming back the wrong way again. So, no. Sorry. Okay? Here's your top, and she's dropping. She shot up, and then Friday down, and then today down. So, it looked good here. And then here is Wednesday. Gapped up on Thursday. Friday pulled back a little bit, and today pulled back just a little bit more. So don't get me wrong, I like the company, but I want a more agreeable number to jump in at. So I want to wait for the new bottom for she to turn around and find 2 good days the upside, and on the third day I want to jump in. Mr. Lucky, what's happening there, brother? Nice to see you back again. Okay, so what else we got? Forever Chasing Buckets. Book. Is there actually a stock named Book? B-O-O-K? No, there isn't. Thomas Abbott, you're crazy. I'm going to take that as a compliment. My mother used to say that all the time, so I guess you and her have something in common. Whoa, I don't understand any of that, but okay. How's it going? It's going most lovely. What am I trading? I'm trading pre-qualified dividend stocks on a consistent basis that are increasing their profits and allowing me to do weekly options so I can capture a 1% every single week, 5 to 10 minutes a day. Got to throw that part in there because I don't want to be sitting in front of my computer all day. I don't do penny stocks and I don't do day trading. Mike Wilkinson. Thanks. So buy options with predictable patterns. Do you have a list that you usually go to? All right, Mike, I have to correct you. Now, I appreciate that you're here and I appreciate what you're trying to do, but I don't buy options, Mike. I sell options. I sell them. I don't buy them. Okay, most options expire worthless, so I don't buy them. If Verizon's not giving you 1%, why not pick some other strike price which gives you one? Okay, Lucky, what do you got for me? So, Mike, as I was saying, I like companies dividend kings, dividend aristocrats, dividend champions, dividend contenders, and anything on Warren Buffett's list. That's about 350 different companies. Those 5 lists. All right, Lucky, what do you got on Verizon? Give me something. Now, Lucky, you've been here long enough. You might have some idea. Tyler, how you doing? Nice to see you. Eggs and bacon. Nice to see you too. Libra Domerno. Okay, what's up? Not much. All right, so what do we have here? We got some more input over here. How far off should your strike price? Okay, Mike, I like to have my strike price almost exactly where the current price is. Let me give you an example. AT&T. Love AT&T. Are you ready? Here we go. Here's your top. Here's your bottom. Here's where it was a year ago. Here's where it is now. Watch the money flow. Up, down, up, down. Here's the bottom of the year. Now she's bouncing off the bottom of the year. 21.55. Well, the 21.50. All right. Well, the 21 is going for 62. It should have a 21.50, but apparently it don't. Some weird reason. But the 21 is going to give me 1%. So let's do it at 21 and see if we like it. Look at your last 30 days. What do you think? Seriously, take a good look at the last 30 days. Here's the top. Here's the bottom. Here's where it was 30 days ago. Here's where it is now. She went up. She dropped, found the bottom. Now she's going up. Here comes my double negative. You cannot not see it. There's the bottom, and now she's going up. You cannot not see that. So let's do this one right here, right now. What do we got? What do we got? What do we got? And covered call, there it is, the 21 right there. And here's what it looks like. Here's what it sounds like. One covered call, AT&T, 17 July. That's 4 days away this Friday. The $21 call option. Well, my profit is $11. It's $2,000 for an $11 profit. That doesn't sound right. Calculator, if you please. $11 divided by 2,089 comes to 0.5%. Well, no. Let's change this one because I like AT&T. It should give me a better one. Let's go for the 21.5. There it is. I knew it was there. Wait a minute. Option isn't trading. Oh, so not doing a 21.5. All right, well, let's do the 22. There we go. There we go. 56 is the profit. 2,100. That makes a little bit more sense. All right, so calculator, if you would. Profit is 56. The investment cost of the trade, including commissions and fees, 21.44. Okay, what's my rate of return? 21 divide 21.44 gives me a grand total of 2.6%. 2.6. I like 2.6. We're going to save this one. This is number 4. AT&T. Here we go. All right, that's going to change. Let's get out of this one. Let's get out of this one. Let's get back to there. Let's get back to here. And here we go. You ready? Here we go. Wait a minute. There she is. One covered call, T, which is AT&T. Do you only trade one contract per setup or multiple depending on the capital? Clyde, I do have 171 contracts of one particular stock. So that's 17,000 shares. So to answer your question, all over the place. Okay, I will buy 1, I will buy 1,000, I will buy 20,000, I will buy 50,000, whatever makes sense at the moment. I'm just showing you what 1 costs so that you can go back and look at your account and say, wait a second, if 1 is only $2,100 and I got 200 grand, well, I can buy 100 of these. By showing you what 1 is, you'll be able to look at your account and say, oh, I can do 5, I can do 7, I can do 74. So I do 1 for a reason. 56 the profit. This is, what was it, 2.5? 2.6. Sorry, 2.6. There it is. $2.6. I think we got 1 more to go, and then we're going to open up for live conversation. What do you think? Who's got one? Ooh, GLW. Isn't that Corning? All right, what else we got? Hold on. How far off should your strike price? Okay, so Mike, I like to be exact as possible if it's available. Okay, Nita Lazoy. Micron, we already did that one and said no. Please list all you found. Gayut, how you doing today? All right, Brader the Trader, nice to see you. All right, Lib, what's going on? All right. Social Flyer, nice to see you back again. Always nice to see repeat visitors. All right, here we go. We just did AT&T. All right, we just did AT&T. Josh. Ooh, Josh wants to take a look at Microsoft. Big dude here. MSFT. Microsoft. Oh, maybe. Okay, the top, the bottom. Where was it? Where is it? Look at this. Up, down, up, down, up. It's definitely going up. Let's zoom in a little closer. But before we do, 390. Okay, 389. So 390. The 390 is going for 6. Yeah, that's over 2%. Every single thing we found today is over 2%. Nice. I like it. Let's zoom in. Last 30 days. What does it look like? Right there. What do you think? You like Microsoft? The top, the bottom. Where was it? Where is it? Look at this. Up, down, up, down. Now she's definitely going up. Here's your new bottom. See? Your bottom for the 30 days. She shoots up. Here's the top. Pulls back. Now here's a new bottom. 1, 2 days up. 1, 2. That's exactly what I'm looking for. I say it over and over and over again. As a matter of fact, I get 2,200 videos on YouTube, and you'll see me saying the exact same thing over and over and over again. When I look for the bottom, when she shoots up, turns around, I want 2 days up, and then on the 3rd day, I will jump in. So Microsoft could be my gate key for the number 5 for the night. Here we go. We're at my glasses. Would you believe it's a 60-inch TV? I think it's 55 or 60. It's huge. It's 6 feet away. Look, hold on. I'll put my hand here and I can touch the screen. You ready? I can touch the screen. So you know how far the screen is away from me. And it's a huge fucking screen. But I still need my damn glasses to see 5 feet. Don't get old. It's no fun. I didn't need these when I was younger. All right. We're going to do a covered call at 390. All right. Covered call, 390. There's the 390 right there. 1 contract. Now, I'm only doing 1 contract so you have an idea of what the numbers look like for 1. Then you can decide, can I do 5? Can I do 10? Can I do 33? 1 covered call, Microsoft, MSFT. 17 July 26. That's 4 days away, this Friday. The 390 call option, 742 is the profit, but 38,000 is the investment. Well, it's a $300 or $400 stock. What were you expecting? Calculator, 742. I'm going to divide it by my investment. Oh, cost of the trade, including commissions and fees, 38. 258, 38,258. Grand total of, no, I hit the wrong number. Try it again. 742. See, I hit the wrong button all the time. Divide 38,258. 1.9%. Okay, just a tiny bit below 2%. I can deal with that. But do you like Microsoft? And then, do you like Microsoft at this current price? Big questions. Do I like the company? Do I like the company at this current price? Do I feel safe putting my money into this company? It's a yes or a no. Either you like it or you don't. It's not a lot of wishy-washy going on there. All right, let's get rid of this. Let's go back to that, get rid of that, go back to there, and there it is. There it is. One covered call, MSFT, Microsoft, 17 July 26. That means this option is going to expire this coming Friday, 3:59 p.m. Because at 4 p.m., ding, 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 you can't do squat. That's it. Monday morning, 9:30 a.m. and Friday afternoon, 3:59 p.m. Because at 4 o'clock, it's closed, it's done, it's over with. Soccer Angels. Okay, isn't Microsoft close to its 30-day high? Hold on a second. Hold on, I'm going to come back to that in a second. And I will answer that question. Hold on. All right, so here's the profit. Here's the investment. 1.9% if you like Microsoft. $1.9. Couldn't give me one more, make it 2%. Just couldn't. MSFT. That's our 5 for the night. So, isn't Microsoft at its 30-day high? Yes, it is. But Soccer Angels? Here's your 30-day high right here. Okay? What is it, 402, something like that? All right, it's 401.75. 401. At 401.75. We're at 390. Okay? What's 1% of 390? 390, right? Hold on. 390. 1% of $390 is $3.90. Well, the 30-day high, like she said, is way up here. Well, $3 on top of that doesn't even take me to $3.95. There's plenty of room, but here, follow the money. Up, 30-day high. Bottom, 30-day bottom. Up, new high, $3.95. Profit taken to $3.75. Now we're going back up. Okay, here's your new bottom. 1 day up, 2 days up, 3 days up, and then does it have room to give me a 1% profit? It either does or it doesn't. One or the other. You either like it or you don't. Then if you back off, look at the year. The high of the year for Microsoft is 560. And then we drop down to 360. So from 560 to 360, now we're at 390. I don't think that's a big deal. But that's me. That's a me decision. That's for me. You guys have to figure out what makes sense to you. It either makes sense to you or it doesn't. Okay? You either like it or you don't. So Univision, 38,000 to get 700. Now, Univision, you make it sound like a 2% return on a weekly basis. It should be a no. What the hell were you thinking? All right, let me ask you this question. The house next door to me is $800,000. And what's the rent? $2,000. So it's a $2,000 a month rent, and that doesn't include what the mortgage is going to be. Let's say if I paid it off full, $800,000. Let's go with this. Let's do this. So in your line of thinking, okay, if the house next door to me cost $800,000 and I'm getting $2,000 a month in rent, so $2,000 a month on rent, and I had to spend $800,000 to get that house, that is 1/4%, 1/4. And that's for a month. If I multiply that out through the year, that's a 6% return on my money. And a lot of people say, I want a 7% return on my cash on cash. Okay, that's 6%. What I'm looking at, what I just showed you, you think you're buying stock. No, I'm not buying stock. I'm buying a weekly cash producing asset. So if I put in 38 grand and I get $700 every single week, dude, that's 2%. That's 2% a week. Well, dude, that's 100% by the end of the year. So I'm not quite sure. Now, I understand what you're saying. A lot of people are queasy dishing out $38,000 to pick up $700, but they're not looking at the big picture. What is $700 multiplied by 52? All right, let's do it. $700 multiplied by 52, because there are 52 weeks in a year, multiplied by 52, that comes to, you ready? $36,000. So if I get $700 every single week on an asset that has been consistently increasing for over 25 consistent years, that means every year they're profitable higher and higher. Hold on, you're going to need to see this. Let's go back to here. Nope. Here. Let's put in Microsoft. MSFT. Okay, here it is. We want to take a look at historical data because I want to show you the facts, all right? Hold on. And no, it's not the dividend. There's a total difference. You heard the expression apples and oranges? Well, we got apples, oranges, and bananas, okay? Apples, the stock. Oranges, the dividends. Bananas, the premiums or the stock options. Hold on. We got Microsoft right here. We want to take a look right here. So you know I'm not blowing smoke. Microsoft Corporation, $390, just what I showed you 2 minutes ago. Now I want to take a look at all the dividends. So let's take a look at every single dividend they have. Okay, dividends only. Sit tight. Okay, dividends only. And I want to look at all of them. It goes all the way back to 1986. Hold on. But I want to go just the last 20 years. Okay, 2 decades. All right. You ready? Here we go. You ready, Univision? Watch. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 50, 46, 51, 56, 62, 68, 75, 83, 91. Every single year for over 25 years, Microsoft increased its profits year after year after year after year after year. What is wrong with that? And it's a weekly cash producing asset. If I drop in $38,000 and it pays me $700 every single week, that's $36,000 by the end of the year. Okay? If I spend $800,000 on the house next door, I get $2,000 a month. That's only a 6% return cash on cash. I'm not understanding the concept in which you're comparing it to. Okay? Stocks, I can get weekly cash flow. Real estate, I can get monthly cash flow. Yeah, I know there's write-offs and there's what do you call that? Appreciation, depreciation, cost base. I understand all that crap. What I'm thinking about is the consistency of the profits. What about O Realty? Andrew, O Realty is a monthly optionable stock, which means they have options once a month, which means I can trade it 12 times a year. but you are selling at the end of the week. No, I'm not. So you get the dividend once, not 52 times. No. Univision, we're talking about the stock option premium. That is every single week. The dividend is totally separate. Remember, apples, oranges, and bananas. Apples, the stock. Oranges, the dividends. Bananas, the stock option premium. 3 totally different things. What do I think about Nike? I like Nike. But guess what? We got our 5. Let's open up the phone call and see who wants to chat. Oh, let's get rid of this. We don't need that. Nope. All right. Let's go back to there. All right. So, phone number. You ready? Here we go. Who wants to be first? 727 543 543 9418. 9418. The phone line is open. So what else do we have? Do you always let the option expire? No. Brian, what happens to me on a daily basis every single day? What did I buy? What did I sell? Where is it right now? Where does it look like it's going? And what should I do? Okay. All right. Zillville Sticks. My home never goes up. Dude, I'm terribly sorry. Seriously, sorry. I bought my mother's house, 30 years ago for $42,000. Now it's worth 200 and something. Okay. My home takes property tax. Okay. Okay, you're missing what I'm trying to say. Your home, your private home, that's not an investment, it's a liability. Anything takes money out of your pocket is a liability. Anything that puts money into your pocket is an asset. So when I say I'm creating weekly cash producing assets, that means everything I buy has a money coming into me every single week. What, nobody wanted to call? Nobody wants to say hi? Mike, you're looking at a lot of different stocks. I am correct saying you must own at least 100 shares of stocks when you do buy these, you sell options. I'm agreeing with you 100%, Mike. 100%. You're absolutely 100% correct. To do a covered call, you need to have 100 shares in order to do one contract. I never said anything different. Your phone number is not showing properly. All right, if it's not showing properly, you got a pen and paper? 727. 727. We can do that. 727. 543. It's kind of like counting down. 543. 727. 543. 9418. 9418. All right, so what do we else have over here? All right, so, yep, there it is right there, 727-543-9418. There is a glare on the screen. Oh, terribly sorry. All right, got it, good. All right, so what else are we looking at? We have, it's strange. I was really looking forward to chat with you some more, Univision. Okay, last words? Ooh, Gardenia, California. Hello.
Hey, hello there, James. This is Caesar.
Caesar, ¿qué pasa, amigo? ¿Cómo está?
I'm doing good. I have basically a beginner's question. I joined the membership group.
Okay.
The one that meets in the mornings. But when I look at everything, it still feels a little bit overwhelming. I'm still trying to get familiarized with sink and swim. What are your tips for those of us who still feel like way too new to jump in? Because when I hear the guys in your group, a lot of them sound like they really know what they're doing already.
Okay, Cesar, what I'm going to say is don't take this wrong. Take your time. The more you show up, the more you listen, the easier it is to understand. Do you remember the first time you drove a car?
Yep.
Okay, gas pedal, brake, rear view mirror to the right, rear view mirror to the left, gas gauge, temperature gauge, and you want me to look on the road too? Remember all that shit coming to you at once? It was really overwhelming the very first time?
Yes, it is, yes.
Same thing. Oh, here's a good one for you. Do you remember the first, wait a minute. Do you remember the first time you talked to a girl?
Ooh, it's been a while.
Yeah, but do you see where I'm getting though?
Yes.
You're not going to absorb everything all at once. Just take one step at a time. Okay? Understand one thing at a time. If there's something that you need specifically, ask me. I will create a video and I'll try to explain it as best as I possibly can.
Perfect. Also on the Zoom, I sent you a little message because I have a mixed up with my emails and I'm having problems logging into the Patreon account.
Okay. All right. Well,
Yeah.
Are you going to be on tomorrow morning?
Well, tomorrow I do have an assignment that starts at 4 o'clock Pacific Standard Time, 4 o'clock in the morning. So I won't be able to, but I'm hoping to be there the next day.
Okay. The next time you're on, okay, after we're done with everything, hang back because after we're done with everything, I open it up to open conversation. We can talk about anything. You want me to walk you through? Fine. I'll walk you through how to set it up. I'll show you what you're looking for, all that kind of stuff. Sound fair?
Sounds like a plan. Thank you so much.
Awesome. So Univision, honestly, I thought I understood something, but now I realized I am out of service. I have no idea what out of service means, but I understand that because I had arguments with my dad for the longest time. If I'm buying a bond at 6%, well, good. Why don't I buy it? And then after I collect 6%, I can sell and get another one. Then I get by the end of the year, I can get 12%. He says, no, it doesn't work that way. You get 6% for the whole year. So sometimes you get stuck in something you think is true, and to the degree in which you think you're right, well, you end up being wrong. And it's like, it's very concerning when you find out what you thought is incorrect. And there's nothing wrong with that at all. It just means you didn't know what you didn't know. It's a learning process. So I appreciate you saying that, but I'd really like to know if you understand what I'm talking about. Stocks are one thing. Dividends are another. Stock options is a third, totally separate. 1, 2, 3. Apples, oranges, bananas, however you want to put it in. Torrance, California, come on down. You're the next contestant on The Price is Right. Johnny, what's behind your... What do you got? Hello.
Hello. This is Eric.
Eric, how's it doing?
It's going great, man. Hey, I'm just getting into stocks trading and options trading. So I'm trying to understand. I don't know if you can explain a little bit more of the how the whole Greeks, I guess the formula works, or
Wait a minute. Hold it. You want me to explain to you the Greeks when it comes to options. All right, hold. You're not going to like this. You still watching?
Yes, I am.
Hold on. Damn it. Black Scholes, that's what I was thinking. I was trying to think of the name. Black Scholes formula. You're not going to like this.
I try, and honestly, I don't think I like it already, but
All right. There it is right there. Do you see that? Let's see if I can make it bigger. Hold on. Let's see if I can make this bigger. Whoops. Right there. All right. Hold on. Let me see if I can make this bigger. All right. You're not going to like this at all. Nobody ever does. It's confusing as hell. Come on. All right. Sit tight. Here it is right here. There it is. What do you think? That, my friend, is called the Black-Scholes pricing methodologies for standardized options. You see that? That's how they figure out what the price of the option should be, based on a whole bunch of different things. You got the stock price, you got the time to expiration, you got insurance. Believe it or not, insurance is in there. The interest rates are in there. Implied volatility is in there. There's so much crap inside that mathematical equation that tells you what the value of the option should be as opposed to the value of the stock. Tell me you're more confused now than you were 2 minutes ago. Hello?
100% more confused.
Yeah. Okay. So the way I see now, I try to put this together for my 9-year-old daughter. So wait a minute. The way I explain it to my 9-year-old daughter is, as the stock price increases, the option value increases. As the clock keeps ticking, as the sand flows through the hourglass, so does the value of our option. As the days go by, the option value decreases. That's called time decay. So it's confusing as hell, brother. As the stock goes up, the option goes up. As the stock goes down, the value of the option goes down. As the time ticks away, the value of the option drops also. As the implied volatility, more people buying, more people selling, the value increases. There's so much crap going into the pricing of the option. It's called Black-Scholes pricing methodologies for standardized options. It's confusing as hell. I don't understand it. And I've been trading for 30 years. But guess what? I don't need to understand it. If the stock price goes up, the price of the option goes up. That make sense?
Yes, it does. So, I guess my next question will be, so I guess what's the best way to identify a stock that would, how can you identify stocks that will go up? I know that there's different strategies and metrics.
All right, hold on. You just answered you asked a question that kind of makes no sense whatsoever. Stocks do, wait a minute, stocks do two things and only two things. Watch. They go up, down, 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 up. I can do this all day long. That's all they do. They go up, they go down, and that's it. But take a look. The high of the year, the low of the year. Okay? She was high, she's down, now she's bouncing up. You can look at it any way you like. You either like the company or you don't. That make sense?
Yes, that does.
Okay, any other questions?
No, I think, you just explained that in order to, I guess, to trade, you don't need to understand the formula exactly. There's just a lot that goes into it.
All right,
you still make money, right?
Yeah, here's another one for you. Do you like cars?
Yes.
All right, let's say you got a 1968 Camaro convertible sitting in your backyard. The wife says, get rid of the bitch. So you take that car, you push it out onto the front lawn, you slap a for sale sign on $20,000. Okay, this guy, Tom, for 2 streets over, you got the blue house with the yellow shutters and the dog that barks all the time. He comes over and says, dude, I like your car. Let me give you a couple $100. Hold it for me until Friday. Okay, think of the money he gave you as a non-refundable deposit just for you to hold it for him until Friday. So if Friday comes around, he's going to give you the $20,000 for the car, or he's not. At that point, if he doesn't show up by 4 p.m. on Friday, you have the right to turn around and sell it again to Peter, who's 2 towns over. Says, hey, I'll give you the $20,000. Hold this. Let me give you a couple $100. Hold it for me until Friday. So you got some money from the first dude. Now you got money from the second dude, but you still haven't sold the car. You still own it. It's still yours. So second dude comes by on Friday, says, hey, I like your car. Here's your $20,000. Thank you. You just sold your car for $20,000. You got a non-refundable cash deposit from 2 guys and the $20,000. It's kind of like the same thing. You're buying a good quality company, okay? I'm sure you've seen Ford dealers. You've seen Chevy. You've seen Chrysler. You've seen mobile gas stations. You probably saw Hess gas stations. You've probably seen Walmart, Home Depot, Lowe's, AT&T, Bank of America. All these companies have been around for over 100 years. It's the same thing. You're buying it. You're holding it for someone for a week. They're paying you money just to hold on to it. And if they want to pick it up on Friday, they will. If they don't, thank you for the money. I'm going to sell it to someone else. Does that make sense?
Yes.
There you go. It's actually that simple. Rule number 1, never, ever, ever buy anything you do not want to hold on to long term.
Okay.
It makes sense, doesn't it?
Yes, it does.
All right. Either the company's profitable or it's not.
Got it.
You got it? All right.
Yep. Thank you very much.
You got it. Have a good day. Ooh, I had 2 missed calls. Who else wants to call in? Phone line is open. All right, so we got Univision. All right, Univision, carrying on with the conversation. I mean, I didn't understand anything. I don't know the difference between a covered call, a stock, and an option. Ho, ho, ho. All righty then. I appreciate you giving me more information. When you guys come on and just blurt out questions, I make the assumption that you know what it is you're talking about. He just admitted he didn't know all those kind of things. There's nothing wrong with not knowing. There's nothing wrong with it at all. You made the distinction that you didn't know the difference between a stock and option and a call a stock option and a dividend. Sorry. Do you have any dividend stocks you would recommend for everyone, weekly or bi-weekly? Daniel, I give everybody the same recommendations. Dividend Kings, 5 decades of increased profits. List 2, Dividend Aristocrats, 25 years increased profits. Dividend Champions, 25 years increased profits. The rules are a little bit different, but okay. Dividend Contenders, 10 to 24 years increased profits. And then just for the fun of it, let's look over Warren Buffett's shoulders, see what he's playing with, and let's do those too. You know? So between those 5 lists, that's 350 different companies that are consistently profitable year after year after year after year. Okay? All right. Rooskirt, I feel pretty solid on how you chose the companies and options, but not so much on what happens after. Okay. You understand a little bit, but you don't understand the whole thing. Kind of like what I said to the last guy. You buy something, you own something, it's yours. With the example I gave a minute ago with that 68 Camaro convertible, he owns it. It's his. He bought it at some point in time. He can do whatever he wants with it. Then he wants to sell somebody the right, because a stock option is the right to do something by a certain date. Now, call options on this side allows you to buy at a certain price by a certain date. A certain price is called the strike price. It's the agreed upon price. Okay? If I have something, I'm going to sell it to you for $50, great. You give me money up front, I will hold it for you. Same example I just gave him. You have the stock, the agreed upon price, the strike price, by the agreed upon date. This Friday, 17 July. Next Friday. I hate these weeklies. They make it different. But every single week, you have an opportunity. This Friday, next Friday, next Friday, next Friday, next Friday. Every single Friday, every single week, you can do it. So once you own something, it's yours to do whatever you want with. If you don't know what you're doing, you don't understand what's the next step, you need to find yourself a mentor, someone that will walk you through how to do it. Now, the strategy that I'm giving to you for free, this is a good opportunity to bring her up in the conversation. Okay, videos. Oops. Oh, there's videos. Here she is. Hold on.
Hi, I'm Tracy, and you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks and lottery trading, and every month you'll be getting 4 lists.
And that's me.
Over 21
My
days
favorite
in
part.
the month.
What does that mean?
That means every single day you can buy a different stock. Because every single day there's a different company paying out dividends.
Yay!
Seriously.
Now, the reason I'm showing you that, Because in 2008, my 9-year-old daughter says to me one day, "Daddy, what are you doing? Can you teach me?" She didn't want to buy a new dress. She didn't want to get a bunny rabbit or a guinea pig. No, she wanted to learn how to trade stocks. So to teach a 9-year-old how to trade stocks, it had to be simple, safe, predictable, consistent, and then no way for her to lose. It was built specifically. What I'm giving to you for free this evening was created for a 9-year-old. I just showed you the video of her. We did a whole bunch of videos in 2011 and 2012 and so on and so forth. So how to do it, what's the next step? It's not difficult at all. Pick a good company. Find out when the right time to buy that company is. That's why we use the calendar. Let's go back to the calendar. That's why we use the calendar. We take all the stocks that we like, the Dividend Kings, the Aristocrats, the Champions, Contenders, so on and so forth, and then we plug them into the EX Dividend calendar, because the calendar tells me what stocks to look at. I'm not looking at all of them. It compartmentalizes them for me. So this week, Hormel, AbbVie, Abbott Labs, FCX, EOG. This is just one list. I have about 6 or 7 lists, all something different. This is companies that are consistently profitable. It tells me what stocks to buy. Then I take a look at the chart. What is the chart telling me? Hold on, let's go take a look at the chart. Okay, UPS. The chart is telling me something. It's a story. Learn how to read the story. And you're going to see things right off the top of your head. First thing you're going to see, the high of the year. It says high. It's not saying hello. It's saying high is the high of the year. Down here, it's not saying how low can you go. No, it's just telling you that's the low of the year. Okay, all the way to the left is exactly 1 year ago, 52 weeks ago. And all the way to the right is where we are today. So the chart is telling a story. The high, the low, where was it, where is it, and where's the cash flowing? Down, up, down, up, down, up. It's not that difficult once you understand what you're looking at. It's the same thing as tying your shoes. When you first learned to tie your shoes, you probably thought that you had too many fingers for the job because they kept getting in the way. How about riding a bike? Well, you kept falling off the first time. Well, what about talking to the person of the opposite sex? It was a little bit confusing, a little awkward. What about driving a car? Same thing. First car I learned was a stick shift. You mean I got to do clutch, brake, gas, mirrors, rear view, gauge, tachometer? Everything is going to be confusing at the start. So one day, learn one thing. That's it. What is a stock? Well, a stock is a portion of a ownership of a company. Well, this is UPS. You buy one share, you own a part of the company. If the company's profitable, they pay you a dividend. What do I like about dividends? Dividends have a tendency, look, to make the stock go up. Stocks have a tendency to go up just before the dividend. It's step by step by step, one step at a time. First, what's a stock? Well, a stock's a portion of the ownership of the company. What's a dividend? It's a part of the profits. As an owner of the company, you are allowed to, you're entitled to a portion of the profits. One step at a time. Don't be overwhelmed. Any more phone calls? Anyone? 727-543-9418. Hello, hello. Phone's open. All right. What if the price of the stock goes below what your cost is? Okay, brother, you asked this question before. I'm going to tell you the exact same thing. Okay? If I'm buying at 122 and it drops down to 95, ask yourself the question, why did you buy it in the first place? Rule 1, never buy anything you do not want to hold on to for the rest of your life. Number 1, does UPS have dividends? Well, yes, it does. Do they increase their dividends every year? Yes, they do. Imagine that. Any MU options? No. I never buy stuff at the high of the year. It just makes no sense to me. And I don't buy options. I only sell them. Daniel, I did not say weekly dividends. Okay, don't put words in my mouth. It is dividend investing for weekly cash flow. If you're having a problem reading the words as they're written, it might be a dyslexia thing, changing them around. But it's dividend investing for weekly cash flow. It says nothing at all about weekly dividends. Okay, what else we got? Okay, we're past 10 o'clock. We passed our 2 hours. Okay, Rooster Kit. Like, if the stock hits the strike price, does it automatically get sold? No, it does not. Let me show you something. You might not, I don't know if you understand it or not, but here's the thing. Okay, Microsoft. The current price of Microsoft is $390.99. Okay, so if I was going to buy an option for the $390 for this week, it's going to cost me $7.15. All right, hold on. I'm going to walk you through it. The current price, $390. Okay, that's the price of the stock at this moment, $390.99. All right. The $390 call option is $7.15 for the right to buy it at $390. So I'm paying $7.15 to buy the stock at $390. So my break even would be $397.15. To buy it at $390. I'm losing $7.15. But if the stock shoots up to, let's say, $450, I still have the right to buy it at $390. I don't buy options anymore. I only sell them. Because if I bought the stock for $390 and I picked up $750 for selling somebody the right to buy it from me, that's a 2% return on my money. I don't collect any money from buying the option until the stock goes above $397.15, because that is my break even. It can be confusing as hell. So for my 9-year-old daughter, buy the stock, $390, sell the stock with a covered call at the exact same price you just paid for it, $390. What do I collect? $715. It's not that difficult. My 9-year-old got it in 15 minutes. Never buy something you don't want to own long term. Don Sequitter. If call expires and stock drops, what do you do in week 2, week 3, week 4? All right, Don, here you go. I'm going to see if I can explain this to you in a manner in which you'll get it really quickly, Don. Are you ready? A couple of things. Number 1, I ask myself 5 questions every single day. What did I buy? I'm going to use Microsoft as an example. What did I buy? Microsoft, $390.99. What did I sell? I sold the $390 call option for this week. Where is it right now? Okay. Where is it right now? It's at $390. It's it. Okay. What did I buy? I bought Microsoft at $390.99. What did I sell? I sold the $390s. What did I collect? I collected $685. Where is it at right now? It's at $390.99. Where does it look like it's going? It looks like it's going up. What should I do? Okay, 5 questions. What did I buy? What did I sell? Where is it? Where's it going? What should I do? I ask those questions every single day. Now, I'm not a day trader, but I look at my stocks every single day. How long does it take me to answer those 5 questions? What I buy, what I sell, where is it, where's it going, what should I do? It takes me less than 30 seconds to answer those 5 questions. What I buy, Microsoft, $390. What did I sell? I sold the 390s. Where is it? It's at 390. Where does it look like it's going? It's going up. What should I do? At this moment, don't do anything. At this moment. But I'm going to quote the great John F. Kennedy. Are you ready? We cannot answer the questions of tomorrow with the information we possess today. So Don is going to come back to rule number 1 and rule number 2. Rule number 1 is never buy anything you do not want to hold on to long term. That's rule number 1. Okay? If you don't understand it, you don't want to buy it, you don't want to put your money into it, don't buy it. If you understand rule number 1, never buy anything you don't understand. So before I buy this, I should know off the top of my head, what's the 52-week high? What's the 52-week low? What are the earnings? What are the profits? What are the dividends? The 52-week high, 560. 52-week low, 355. I should know those off the top of my head before I buy anything. So am I okay buying Microsoft at 390? The high is way up here. The low is way down there. So to answer your question, what I buy, what I sell, where is it, where's it going, what should I do? Can't answer that until Friday's here. And then once Friday's here, then I'll decide. Okay, am I profitable? Am I at a loss? Does it look like I can hold on to longer? When is the dividend coming up? Those are all kind of questions that are coming up every Friday. Hope that answered the question. How do you put the stocks in the calendar on Thinkorswim? Knobs, excellent question. Hold that thought. Knobs, are you ready? Let's get rid of quick chart. You ready, Knobs? Here you go. Right over here where it says quick chart. I don't want quick chart. I want... Oh, that's not what I want. Watch list. That's what I wanted. Watch list right there. See it, Knobs? It says watch list. Alrighty, right there we go. Watch list. Okay. Right next to the watch list, default, slide on down, it says create watch list. Right there. You click on create watch list. Boom, it shows up. You put in whatever you want right there. And then you can import the symbols from a CVS, a comma separated value CSV file, or you can put them in one at a time. Add symbol, remove symbols, import, and then you just save it. That's it. That's all you got to do. What do I think about PFE, Pfizer, and KHC for this week? We'll take a look at it tomorrow because we're already past 10. Nowadays, I'm going from 8 to 10. But I just want to answer the rest of the questions. Knobs, you're welcome. You're welcome. Okay, Don, I hope I answered the question for you. The phone is still open if anybody wants to call in. 727-543-9418. Okay, where do we go right here? Uh-oh, looks like someone got booted by the moderator saying improper things. Joe Schmo! James, you're so patient explaining this. I was so boneheaded when I started this journey. All right, Joe Schmo. It was nice chatting with you yesterday. Brother, is your goal for the stock to hit the strike price or to avoid and keep the premium? Okay, brother, you're asking way too many questions. Okay, my goal is very simple, and I don't hide it from anyone. I'm looking for a simple, safe, predictable, consistent way to get 1% every single week. So if the stock goes up, I get 1%, great, bye-bye. If I collect the dividend and the dividend is more than 1%, great, bye-bye. If I do a stock option and somebody buys the stock from me, great, bye-bye. I don't want to hold on to anything. I've never, ever, ever seen a hearse go by with a U-Haul. Sorry, it just doesn't happen. Okay, you're not taking it with you. Okay, listen, what else we got? That's all those questions. La 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 la. Bo, Joseph Jackson, Rosie Chill, Bob Boy. Thoughts on Zeta? What the hell is Zeta? Okay, get rid of that. Here we go. Zeta. What is it? ZTA? ZETA. Interesting. We'll have to take a look at it tomorrow. Arlene. Nice to see you, Arlene. Papa 171. Nice to see you, too. By Lewis. Hello. Jose, JL Haba, weekly dividends. No, Daniel, I did not say weekly dividends. Shonda likes trading. Okay, Shonda, we already did Ford. It is recorded. You can go to YouTube and watch the recording. Brandon, thank you. Garrett Guru Gear. Interesting. Garrett, nice to see you. Hugo. G. Nah, but for him. Okay, whatever. Okay, all right. Mr. Black Mansion. Nice, interesting name. Big Boy Cloyd. It actually makes perfect sense. Well, I kind of like that summarization. Kissable, nice to see you. What platform am I using? This is Think or Swim, offered through Charles Schwab. Uh-oh, Mr. Premium. Oh, wait a second, Mike's. Sounds like he's more interested in trading. Of course I am. I'm interested. Okay, dude, I told you from the very beginning, I'm looking for a simple, safe, predictable, consistent way to make 1% every single week. Whether I get it through stock options, great. Whether I get it through dividends, wonderful. Whether I get it through stock appreciation, great. I really don't care. Simple, safe, predictable, consistent, and no way for me to lose. That's my criteria. That's what I'm looking for. Okay? Mr. Premium. I love Altria. I love AT&T and Verizon. You need a mirror, or you could go to the other. What platform are you using when you do that one? You could go to a different website where everything is normal, because the selfie cam and YouTube just doesn't want to seem to work together. All right, what do we else have here? Ooh, Tufan wants to take a look at GLW. Oh, wait. GLW. Corning, that's what it is. Wow, I missed all these questions. It actually makes perfect sense. Thank you. Tufan, GLW, that's Corning. We'll take a look at it tomorrow. Happy, nice to see you. Big German, that's what I need. Yeah. All right, Stefan. How's it going, Stefan? Holy hot flash. NyQuil, nice to see you. DT. James, it's a pleasure, sir. Thank you for the insight. Wonderful. All right. Swagman, MU, Micron. We looked at it earlier today. Was that before he got a bullet in the head from the CIA? All right, Alex, I don't do politics, but I understand what you're getting at. Thinkorswim sucks. Thank you, Alex. Alex, if you know another trading platform that has everything that Thinkorswim has without going from one screen to the next, to the next, to the next, everything is right on one screen. I can look at the chart. I can look at the stock information. I can look at the option information. And I can even look at my trade. Where is it? Right here. Let's take a look at this right there. And let's do that right there. And let's do this right there. All right. So, Alex, you think it sucks? Wonderful. I can see the chart. I can see the stock information. I can see the option information. And I can see the order that I'm putting in. Everything is right there, easy for me to find. If you know of another trading platform that is better than this, I'm all for it. Okay, oh my God, 15, 16 years ago, I wrote a book on choosing the right trading platform for your style of trading. I wrote it, I don't know, 15, 20 years ago, however long ago it was. But this is the one that I came up with that has everything that I'm looking for. So Alex Wine, if you come up with one that's better than this, I'd be more than happy to look at it. What are my thoughts on TSLY? We'll have to take a look at it tomorrow. Mindy, how you doing? 6-foot Asian. No way. They exist. Do 6-foot Asians exist? What indicators do you use, if any? Okay, Mike, what I like to look at too. You ready? Consistency of profitability. That's number 1. Number 2, weekly options. That's it. Weekly options and consistency of profitability. Can the strike price be different number on a different platform? No. Those prices are the same at any other platforms. Absolutely. The strike prices are the same. The bid and the ask is usually the same also. Because you got to remember, doesn't matter what store you're going into. A loaf of bread is a loaf of bread. Okay? Okay? A tire, a 14-inch tire for a 68 Mustang is 14-inch tire for a 68 Mustang. No matter where you buy it, it's still the exact same. Thanks, you're welcome. Expiration, do you prefer? Not quite sure what you mean by that, Garrett. So, Garrett, I'm going to apologize because you're under the assumption that this is the only screen that I'm looking at. Now, Garrett, I'm live streaming on 13 different platforms. You're only on one of them. So you're seeing only what you're looking at. There's 12 other platforms that I'm broadcasting on, which means there are questions, and more questions. So I tried to get to as many of them as I possibly can. Oracle, we'll take a look at it tomorrow. Newcomer! You have to own 100 shares to sell options. No. You can sell an option without owning any shares. It's called selling naked options. I wouldn't suggest doing it, but you can. But for a covered call, you need 100 shares to sell one call option against those 100 shares. 6-foot Asian, what are your thoughts on TSLY or JEPQ? I would love to tell you I don't like either one of those, but I would prefer to show you. My time's done for the night, but if you want to come back tomorrow or the next day, I'm here Sunday, Monday, Tuesday, Wednesday, Thursday, 8 p.m. Oh, before I forget, before any of you get sucked into a bunch of BS, number 1, if you're getting a text message, a WhatsApp, a Telegram, an Instagram, whatever from me, yeah, that ain't me. I don't do that. I am old school. I got gray hairs. I write stuff down because I don't like technology. It's kind of weird because here I am. So if you think you're talking to me, you are not. Unless you pick up the telephone and say, hey, is that you, James? I say, yeah, baby, it's me. Yeah, if you're not talking to me on the phone like a regular person, you're not talking to me. And I don't give you any bullshit. Well, it's not a good time for me right now. No, I don't do that. I don't talk to people via electronic communication. Drop your number, I will give you a call. Oracle, we'll take that next time. Not for regular calls. User 161915934. Don't know what your parents were thinking when they named you that, but okay. Not for regular calls. I'm not quite sure what that means. Big Jerem, what book is that? Uh-oh. Now, Big Jerem, you did hear me say that I have 13 different platforms that I'm broadcasting to. So that means I'm looking at a whole bunch of different questions. So what book is that? I understand the question, but I don't have what reference there is to it. 6-foot Asian, you think that's funny? I'm not quite sure, but I think it's funny. And yeah, we exist. Yeah, but 6 feet? That's a big Asian. Black Diamond, Boggleheads. Okay. Not quite sure what Boggleheads has to do, but okay. Parnell, nice seeing you. I see him, Big Jerome. The book you wrote. Oh, the book. I wrote 15 of them. So I'm not quite sure which one it is you're thinking about. All right, so I think we're done because I don't have any more questions for you guys. Wait a second. Here we go. Mike, when do you decide to buy the shares for your options? Ooh, Monday morning. Monday morning. Okay, first thing Monday morning. I have a live trading show. Okay, it is a paid show, and I'm not trying to sell anyone anything, so I don't think I am. But Monday morning, a whole bunch of us, about 100 people, so we get together and we take a look at different companies, specifically those getting ready to pay a dividend. Because just before they pay a dividend, stock has a tendency to go up. Okay? Those are when I choose Monday morning. And then Tuesday, Wednesday, Thursday, what did I buy? What did I sell? Where is it? Where's it going? What should I do? And on Friday afternoon at 2:30, we take a look at each one of those positions just to make sure we don't lose any money. Would you advise using margin or borrowing funds from platforms? Well, here's the thing. I have margin money. Okay, I borrow money all the time. I will borrow money all the way up to 20%. I honestly don't care. I will borrow as much money as someone will lend me. I got no problem with borrowing money. But starting out, you should not borrow money from anyone until you are really, 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 really good at it. Really good at it. Okay? And I always tell them, just starting out, paper trade. Don't put any money into anything until you're good at it. Remember Monopoly, 4 greenhouses, 1 red hotel, round and round and round you go, look out for the go to jail, collect $200 when you pass go. Never put money into something until you have paper traded successfully over and over and over again. Stock market's been around for over 400 years. It ain't going anywhere. Take your time. There's always another trade. There's always another company. There's always another day. Don't be in a rush. Don't be in a hurry. Make clean, decisive, right answers. DJ, do you have a list of books you wrote that can post, or are you avoiding answering? No, I have a list of books, but I don't try to sell anything here. I know you want me to tell you, but I'm trying to tell you I don't sell anything here. We're all adults. We know how it works. You want to buy something? Go to the website. Buy it there. I don't want anybody to think, oh, he's trying to sell something. I'm not trying to sell you anything. Okay, I'm giving advice away for free. Okay? Ask a question, I'll answer the question. I'm not trying to sell you anything. But DJ, top left-hand corner, it says Dividend Stock Talk. Click on there. That'll take you to the website. That'll show you everything that's for sale. All right, thanks. You're welcome. When do you talk? Okay, yeah, questions? I'm done. I think I am. That's it. Wait a minute. On Friday, does the option automatically sell? No. Options do not expire on Friday. They expire on Saturday. Okay? Our last opportunity to do anything is 3:59 p.m. That's it. Joe Schmo! Giving away knowledge, not advice. Thank you there, Joe Schmo. Thanks. You're welcome. Okay, that's it. We got some closing music because I love my music. I do. There it is.
We built an $80 portable AC that makes every air conditioner on the market completely unnecessary. Every cooling solution has the same fundamental flaw, and nobody was fixing it. You see, traditional...
You dream in stars, then dive into the deep, fixing the world while the rest of us sleep. Your heart set on giving, no matter the strain, building your legacy through love and brain. Julie knows that fire in your soul,
Bye, guys.
the kind that lifts the broken whole. James, you reach the skies, no one dares. In your hands, the future's caught unawares. That's to know what the hell were you thinking. You laugh as the eye keeps the daylight blinking. Every day's a quest, not some disguise. With James in the storm, the dream never dies. Retired